Hello friends, Zomato has turned profitable and has posted a net profit of 124 crore in its recent quarter. In fact, it has been profitable from past 2 quarters. And not just that, if you look at the share prices, they are just skyrocketing. But are these profits from its primary operations? Can you solely rely on these profits and conclude that Zomato is a great investment option? Well, to understand that, you need to stay with me until the very end of this video. Now friends, before we dive into the profitability of Zomato, let us take a pause and understand its business model. Now there are three major business verticals in Zomato's portfolio. Number one that we are already aware of, that is food delivery business, wherein it provides platform to its customer to order food online and at the same time provides delivery partners to its restaurant partners so that they can serve the food. Now by doing this, Zomato earns commission on every order served and at the same time it earns advertisement income from companies, from restaurants by prioritizing their restaurant first in the application. It also charges delivery fees from its customers, but however a large portion of it goes to delivery partners. Now coming to its second business, that is Blinkit, a quick commerce company. But before that, what is quick commerce industry? It is an industry that focus is on quick deliveries, that is to deliver food, groceries and other stuff within an hour. There are many companies in this industry like Zepto, Tenzo, Big Basket, and Blinkit is one of them. In fact, Blinkit is one of the fastest growing quick commerce companies. It is growing at such a massive rate that it reported a quarter-on-quarter growth rate of 28% and year-on-year growth rate of 103%. The revenue streams for Blinkit are advertising income from companies by showing their brand on the top pages of the site and of course commission income for every product that is sold through Blinkit. Let's talk about the third business model of Zomato, which not a lot of people are aware about, and that is Hyperpure. Hyperpure is a B2B business model of Zomato which provides raw material to its restaurant partners. Let us understand this with the help of an example. Let's say I am a restaurant owner, so I will be in constant need of raw materials like fruits, vegetables, wheat, milk, dairy products and etc. Now, to fulfill this recurring demand, Hyperpure comes into the picture. With the help of Hyperpure, I can simply place an order on its platform and Zomato shall source these supplies directly from farmers and producers and supply it to my restaurant. By doing this, it shall earn commission in the process. Now, even Hyperpure is one of the fastest growing businesses of Zomato. In fact, Zomato is now banking on Blinkit and Hyperpure for its future expansion. Apart from these main businesses, they also have other business like Zomato Gold, which forms part of food delivery, and Zomato Fest, where they conduct events like Zomato Land. Now, let's talk about the profitability statement of Zomato. But before that, let us take a detour and understand the profit statement, that is the income statement, so that we can understand the financials of Zomato better. Now, we all know profit is revenue minus cost, but in order to reach to that profit, there are many layers to it. Let's understand this with the help of an example. Let's say I am a retailer and I sell t-shirts, and I sold say 1000 t-shirts and generated a revenue of 1 crore. Now from this 1 crore, I will further deduct variable cost, that is the cost of t-shirt itself in my case. Say it is 40 lakh. Now what I will get is called contribution of 60 lakh. From this contribution, I will further deduct indirect expenses like electricity, salary, rent, etc. Say it is 20 lakh. Now from the 60 lakh, I will deduct 20 lakh and what I will get is 40 lakh, which is operating profit. From this operating profit, I will further deduct interest, depreciation, taxes, say 30 lakh in my case. And finally what I will get is net profit of 10 lakh. Now this net profit belongs to shareholders who are owners of the company. In this case, this 10 lakh belongs to me. Now coming to Zomato. In case of Zomato, revenue comes from commission income, advertisement income and delivery charges. And if I only consider this income, then Zomato shall be net loss, but it isn't. Why? You see, if you carefully observe the profit and loss statement, you will see that there is one item below revenue from operations with the name called other income. It is this other income that is helping Zomato generate net profit. Now, I know I am completely stranger to you and this is my first video, so why will you trust me? Therefore, in order to make sense, let's talk in numbers which are disclosed by Zomato itself. In financial year 2022-23 itself, Zomato reported an other income of 682 crores. And in current financial year, for 9 months from April to December, it reported another income of 612 crores. Not just that, in third quarter, that is October to December itself, Zomato reported an other income of 212 crores. Now, to show you how material these numbers are, if I just remove this 212 crores of other income, then Zomato shall be posting net loss of 95 crores in third quarter itself. So, is it wrong to be profitable from other sources? Not at all. Rather, it's a good sign if a company has income from other sources apart from its main operations. However, in case of Zomato, it is to be observed that is it healthy to have income from other sources while being loss-making from your primary operations? Had it not been for other income, the company would still be posting net loss, and not just that, the amount of net loss would have been exorbitant. So, what is Zomato exactly doing to post this other income? To understand that, we need to bifurcate this other income further. Now, other income comprises of three major elements, that is, income from bank deposits, interest income from government securities and bonds, and lastly, capital gain from sale of mutual funds. It is these sources which is helping Zomato report net profit in its financial statements. Now friends, I am not against Zomato in any manner. I want to get my food deliveries on time. But however, it does poses a question which we need to think over, and that is, if the company is at a growing stage, then why it has such huge investments parked in these other assets? And secondly, when and how company plans to turn profitable from its primary operations. Looking at its current financial statement, it is clear that company is far from making profits from its primary operations. However, also looking at its growth, it will be an interesting case to see that in coming years how Zomato turns out to be. If you found the video helpful and insightful, then do hit the like button. If you didn't find it insightful, then hit the dislike button so that I know where I need to improve. If you have any comments about the video or about the Zomato's case study, then do mention it in the comment box. And for more such videos, for more such insightful videos, do subscribe to my channel. Thank you.